Okay, let's see. All right, okay. We're gonna go ahead and get started, Jake. So, Jake, I want to say thanks for coming with us. Thanks for joining us today. Um, Let me go ahead and go over here. We have a few things to take care of legally.
Go right ahead, Jeff.
Yeah. So just to remind everybody, today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell securities, but rather guidelines to interpreting and using specific indicators and features within the software. Information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading securities. Metastock, the Traders Forum LLC, and their employees disclaim all liability for investment decisions by investors based on the use of the software. Metastock Traders Forum LLC and their employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in this presentation should be construed as investment advice or solicitation to buy a security. So, with that being said, we've got the legal stuff out of the way. I do want to say, welcome to the room, Greg. Yes, Jake's camera is not working, which is fine. What we're going to do, but as we get started, I just want to welcome you. If you're watching us on YouTube, hit the like and the subscribe. It helps a great deal. I want to invite you to join our community at thetradersforum.com, www.thetradersforum.com. Everything up there right now is absolutely free. You can chat with other traders. You can learn about technical analysis and trading the markets. And there's a diverse group of chatters there that we'll kind of share ideas with. I'm in there all the time talking about stocks that I might be looking at, all that kind of stuff. So, Greg, thank you for doing the AV check for us as well. So, okay, let me talk a little bit about Jake. Jake's a good friend of mine. I consider him a friend at least. Jake has just an incredible resume in terms of, like, I believe your first traders was it you started trading in 1968, right?
That is correct. The summer of 1967, in fact.
And on here it says you had like 44 books. I'm sure up to 50 by now.
No, just 44.
Okay, all right. You've been publishing a weekly newsletter type of a thing since 1972, and it's never stopped. That's 2 years before I was born.
You know how to hurt it, Jeff.
And from a personal level, that's kind of what's kind of on the resume that kind of kicks off. I like, and I'm going to ask Jake to talk a little bit about how he got started in trading, because I love that story. I've heard it a few times before, but I personally used to live maybe 25, 30 minutes from Jake up in the redwoods of California. We would do a lot of sessions together with trading options for profit, which is part of the options, the Silicon Valley options group. And this was all pre-pandemic. It would have been about 13 or 14 years ago. But I remember several times where I'd pile into one of Jake's sports cars and we'd go over the mountain and we'd do classes with this group. And it was great. I had my wife has met Jake, and we've had stories with him. And I consider him a personal friend of the family. I absolutely love you, Jake. So Satish, good to see you. Thanks for saying hi. So that's how I'm going to introduce you, Jake. There you go.
Quite an introduction, Jeff, and I love you too.
All right, cool.
We've known each other for a long, long time, and we're actually the survivors in this business. And everybody, please pardon the voice. It's the voice of an old man who's got allergies, and it's allergy season here in California. But I'll turn it back to you now, Jeff.
For sure. I'm also allergic to air, so everything. Anyway. So Jake, I know I kind of hinted to this a little bit earlier. Your background's in clinical psychology or psychiatry?
Psychology.
And you have a lot of stories about that. But how did you get initially interested in trading, and how does that have anything to do with eggs?
Well, that's a very big question, Jeff. I'm happy to talk about it. You know, in the summer of 1968, I graduated from college and got my first job working in a mental institution in Chicago. So I was working with psychotic patients. And of course, it's not a very pleasant job, even though you're doing clinical psychology and trying to help people. Some of the worst patients imaginable were in that hospital. And so, of course, I was kind of bored with my work. I knew a little bit about the stock market, but not very much. One night, this is actually about 2 in the morning, I was reading the Wall Street Journal because I had nothing better to do. And I saw an ad and it said, "Will eggs hit the moon this year?" And showed a picture of a man named Maury Schneider. His picture was in a rocket ship and it was heading toward the moon, which was made out of eggs. And I'm thinking, what's this all about? It says if I clip the coupon and send it in, a broker will call me and tell me all about trading egg futures. So, hey, I had no idea that you could trade futures. A couple of weeks later, I get a phone call. I get a brochure in the mail, and it's a broker, and he says, "Listen, if you send me $1,000, I can turn it into $6,000 in a matter of a few weeks." I said, "Hey, it's too good to be true." He says, "No, no, no, no. I can do it. We trade the egg market, and we know what makes the egg market go up and down. And every time the price of eggs goes up 1 cent, you make $225. I said, "But can I lose?" He says, "Yeah, you can lose it all, but don't worry about that. It's only $1,000. Well, in 1968, you could buy a brand new Volkswagen for $1,600. So $1,200, $1,000 was a lot of money. Besides that, I came from a very poor family. My father barely made $6,000 a year. But nonetheless, this broker kept calling me. And he says, "Listen, you work in a hospital, right?" I said, "Right." He says, "There's doctors at hospital, and doctors have money. Go find some doctors to lend you the money. Send it to me. Tell them in a couple of months we'll give them back their money double." So, like an idiot, I did it. Sent this guy $1,200. Next thing you know, I'm getting pieces of paper in the mail. "We bought September shell eggs for your account. We bought November shell eggs for your account. We bought this for your account. We bought that for your account." Always eggs, November eggs, December eggs, September eggs. And it showed a price he got in, price he got out. And at the bottom, it showed I made $200 and he made $70 in commission. So the account keeps on growing. Pretty soon it's $3,500, $4,000, $4,500. I'm thinking, this is incredible. I'm telling a friend of mine about it. I said, "What should I do?" He says, "Don't call him." I said, "Why not?" He says, "First of all, you don't want to ruin his game. Don't look over his shoulder. Don't ask him what he's doing. Second, if it's illegal, you don't want to know about it."
Okay.
Okay. So we get to $6,000. He says, "Now I'm going to send you $1,000. You split it up between your investors, and pretty soon we'll have them all paid off, and we'll trade with what's left." So meantime, I'm getting these statements in the mail. I was still living at home. My dad, who's from the old country, who barely spoke English, he opens up one of my envelopes and he sees inside that there's like $8,000 in the account. He says, "Jake, where you got this money?" I said, I'm trading futures." He says, "Trading futures? What's that?" I said, "Well, you buy and sell things that don't exist with money you don't have." He said he can't understand that. He never even had a credit card. So we kept on trading and trading. Pretty soon, it's about $12,000, which was, a whole lot of money for me. And I called him up. I said, "Dan, I can't take it. Can you teach me how to trade?" He said, "Sure." I said, "How long will it take?" He says, "Come down to my office at the Mercantile Exchange. It'll take me 20 minutes. I said, "You're gonna?" I said, "How are you going to teach me how to trade in 20 minutes?" He says, "It's really easy." I go down to his office. He sits me down. He says, "Listen, chickens lay eggs. Eggs come from chicken. Chickens that are happy lay more eggs. Chickens that are unhappy lay fewer eggs. Supply and demand. So we know when it's going to get really hot in the barnyard, and that makes chickens unhappy. When the temperature is over 78 degrees, chickens get very unhappy, and unhappy chickens lay less eggs. And if it gets really hot, guess what happens?" I said, "What?" "The chickens die." I said, "Oh no." He says, "No, no, 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 that's good. That's good. See, we buy before it gets hot, and we buy before the chickens die. That makes the price go up. When the price goes up, we sell. It's really simple." So I started looking at the temperature and the growing in the chicken areas, and he was absolutely right. So this goes on and on and on, and he's making a whole bunch of money. I decided this game is for me. I go to the library, I get a book called Modern Commodity Futures Trading. It shows charts. I never even knew you could put prices on a chart. And he shows trend lines and all that stuff. And I'm thinking, this is really cool. I get my ruler out, I draw a trend line, and I say, yeah, this is incredible. The price goes down to the trend line, then it goes up again. Then it goes to the top trend line resistance, and it goes down again. This is so easy. I could even do this without chickens and eggs. I call my broker, say, Dan, send me my account. He says, what do you mean? I said, I want to close out my account. He says, no, you don't want to close out your account. I said, yeah, I'm going to trade it myself. I'm going to trade pork bellies. He says, you trade pork bellies, you're going to lose money. Why? Don't trade anything that can't die. That's the first rule of commodity trading. Only trade things that can die, like corn and wheat and soybeans and chickens and eggs. But if you trade pork bellies, they're already dead. They're frozen pork bellies. Don't do it. Dan, I'm going to do it. He says, no, you're not. I said, yes, I am. I get the money, open a different account, and in 3 days, I lose it all. And that's how I got started, Jeff.
Okay. That's a great story. Thanks, Jake. I laughed at a couple times. So one of the things I wanted to ask you a little bit about is you do a lot of work at is it seasonalswing.com? What is the website?
Seasonaltrader.com.
Seasonaltrader.com. So you look at a lot of seasonals.
Yep.
And you look at a lot of technicals. How much of a decision would you say is made on seasonals versus technicals? Is it a combination? Can you talk a little bit about how you make actual decisions?
That is a beautiful question. It took me 15 years to realize that every trade has to have 3 parts to it: the setup, the trigger, and the follow-through. So when you look at a pattern, head and shoulders, key reversal, support, resistance, MACD, etc., those are all patterns. A pattern has to have predictability. So today, with our computers, we can scan literally thousands of patterns, but we don't know if they have predictive validity. Once we test them and put them on the computer, like on Metastock, we can determine, do they work? If they work, we will assume they're accurate, whatever it says. For example, we know that some of the seasonal patterns are accurate 78% of the time in the last 50 or 60 years. But still, we need a trigger. The trigger is what people call timing. And the trigger says, okay, this pattern, which has been right 78% of the time for the last 50 years, is now moving in the right direction. It's a trigger. So that says it's time to get in. We get in, then comes the hard part of the equation. You manage the risk. You have a profit target, and then you maximize the profit. So that's the process we follow.
And you call it setup, trigger, and follow through.
Yep, setup, trigger, and follow through.
Okay, very cool. Now, I'm sure over the years that you've been kind of teaching people to trade and stuff like that, you've seen a lot of people come into the market, wash out of the market, trade successfully. Is there any particular advice that you'd have for somebody that's like a brand new trader?
Yes. I've got an earful of advice. Number 1, start with enough money. Number 2, make sure that whatever strategy you're using, it's specific and clear. So for example, when you're using Metastock, if you were to use, for example, the expansion contraction indicator on the screen, you want to be able to know when it goes to buy, when it goes to sell. And so you use the expert advisor, which explains everything in clear, specific rules. If you can't do that, you shouldn't be trading, because otherwise you're going to lose your money faster than you can imagine. So the expert advisor gives you all the information you need, why you're doing what you're doing, when to do it, when to get in, when to get out, your largest profit, all the details that you need. And I shouldn't take credit for this. The beautiful programming here was done by Metastock, and the idea for expansion contraction came from a fellow named Brian Latta, who took my ideas about the moving average channel and turned them into this beautiful indicator here on
Yeah, right here.
On Metastock. Yeah.
And he did a great job with it. And such a nice guy too. So I always thought it was the Jake Bernstein expansion contraction. I didn't know it's the Jake and Brian expansion contraction.
I want to give him full credit.
Oh, for sure. Yeah. And he deserves it as well.
Absolutely. So that was a great question. And, here's the thing, Jeff. The thing is this. Most people, They watch the TV ad. They see a guy sitting in front of his computer with a chart, and he's happy. It looks like he's making money, but in fact, he's not making money. They want you to believe that you can just come into this game and automatically start making money, but it can't be done. You need some powerful technology. You need a powerful program like MetaStock. You need specific and clear rules. Otherwise, you're just shooting in the breeze. You're gambling, and that's not good.
I want to talk to you a little bit about money management and position sizing and that kind of stuff. Do you have any general guidelines that you give around kind of how much a trader should go in with a single position, where the stop losses should be, anything along those lines?
Yes. I would not want to risk, and I do not risk more than 5% of my account size on any one trade. So, for example, if you've got $1,000, the amount of money you can risk is very limited. That's why it's important to start with enough money so that you can have the money to absorb those losses and live to trade another day. Super important.
Okay, cool.
One more thing, Jeff.
Sure.
You need to know how to read a track record, as an example. Some strategies will say they're 80% correct. That may be true, but what if they're 80% correct after losing 8 times in a row? Well, if you lose money 8 times in a row, I guarantee you that after the 3rd time you lost money, you're probably not going to have an account left, or you don't want to trade that strategy anymore. So it's really important not just to look at the percentage accuracy, but how many consecutive losses it takes. How much money has it lost in maximum in a successive period of losses? Those are super important facts.
Yeah. Somebody told me one time, and it kind of stuck in my head. I wish I could remember exactly what it was, but they're like, you can have a 90% win rate and lose 100% of your money on the 10th trade. So yeah.
No doubt about it. No doubt.
Do you have a favorite indicator or an indicator you wouldn't be able to trade without?
I would say expansion, contraction, seasonality, and divergence.
Okay. Easy enough. Do you have any trades that stand out to you over obviously you've had a huge history of trading. Is there any trading experiences that you found particularly educational or noteworthy or anything along those lines?
I could probably talk about that for the entire day, because every trade is an experience. And the problem is this. People say, learn from your mistakes. Every time you take a loss, determine why you took that loss. Was it the system, or was it the trader, or was it both? That's fine. But I think you need to learn from your profits. Because when you say, hey, I made $500 on this trade, always ask the question, how did I do it? What did I do to make money? Because if you don't understand why you made money, was it from the system or was it sheer dumb luck? Until you understand why you made the money and how you made the money, it's not going to improve, because there's a million things you can do wrong. There's only a few things you can do right. So you have to learn that. And for me, every trade, win, lose, or draw, is a learning experience. I want to go through it and look at it in detail. Yes, I did this right. I only made $1,000. I could have made $1,500. Where did I mess up? So those are the important things about a trade for me. That's why every trade is important.
Let's see. You do a lot of stocks and futures.
Yes.
Do you do mostly stock trades, mostly futures trades? Is it pretty even blend? What do you think about that? Or what do you think is your kind of breakdown on those?
I'm an equal opportunity trader. I'll trade anything that moves. But I am not an options guy. I'm not really good at options, although they're very simple. The time factor is the most important thing for me. And I would hate to be in a trade where I run out of time and my option expires worthless, but still the idea was correct. That's very frustrating for me. So I'm not an options guy, but I do trade futures and stocks very actively.
So Tish wants to know if you can use JBXC with the Nifty 50.
Oh,
which I tried to pull up. I can't remember the symbol on it right now.
Yeah, you definitely can. It's a great strategy for the Nifty 50. As
Oh,
long
here
as
it is. I got it. Here we go. Can you see the chart, Jake? Maybe we can talk a little bit about what it's kind of saying right now.
Sure. toward the left of the chart, where the expansion contraction changes from red to green. When it's green, you're long the market, and stays green for a long time until midpoint in the chart sometime in August, where it turns briefly bearish for a couple of days and then starts right back up again. So if you're a good trader, you're going to be in this trade from the long side and catch most of this move. It's a very beautiful chart.
And I got that indicator, or I got that symbol within like 5 tries.
So, Jeff, not bad at all.
Yeah. Brute force that one.
I see.
Let's see. What do you have any kind of expectations? We're in a election cycle this year, kind of coming up into the end of it. We're coming into winter. There's some seasonal tendencies with the stocks. There's some cyclical tendencies people like to talk about with kind of the Dow and an election market. Do you have any thoughts kind of in what you're expecting through the end of the year? And of course, this comes with a huge disclaimer. We always let the market tell us what it's doing.
Right.
Maybe you can talk a little bit about what you kind of expect.
I'm a student of market history. The history of the stock market from October, November, December is the most predictably bullish period of the entire year, going back well over 100 years. So if we go back to the late 1800s, you find that a majority of the time, October, November, December are the strongest months on the upside and also the most readily predictable on the upside. So I think the market's going higher. I think it's going much higher. Maybe not just right away, but in terms of timing, I would say mid-October is when we should be out of the woods in terms of this volatility and back on the upside, much higher than most people think.
Yeah, we've already had a pretty good bullish year. And yeah, we've had a lot of people that share that same idea. So do you, in terms of commodities, are there anything that seasonally you like to look at towards the end of the year?
Yes, especially now. All of the grain, soybean, wheat, corn markets are all bottoming for what is likely to be some very big up moves. In fact, Jeff, do you think we could change the chart to a COT chart?
Absolutely. Yeah, I think so. I might have, if I have that installed here on my demo machine, we can. Let me just give it a go real quick. You want to look at corn, maybe?
Yeah, let's look at corn because there's something happening in corn that I want people to see. I don't mean to throw you a curveball.
No, I am the expert curveball. Let's see if I have it though, because it is I'm not sure I have setup and timing triggers installed here, but I can talk a little bit about what it is if I don't. So let's take a look here. It would be under STT. Oh, look at all this stuff. I have it. That's awesome. Let's make let's see if it works though. So this is part of one of the things that Jake and I developed a while ago. I think we're on version 3 of it. And it's in addition to all of the COT charts, which I don't have the indicators for those, Jake, installed here. But in addition to all the COT, it includes several technical systems that Jake does.
Let me tell people what's happening.
Okay.
For the first time in a long time, we have commercials who are the biggest force in the business, buying net long positions in corn, soybeans, wheat, and soybean oil and soybean meal. These types of behaviors usually precede big moves to the upside. So if someone has access to a corn chart or a wheat chart or a soybean chart, look at what the commercials are doing. There are 3 categories of traders: small speculators, large speculators, and commercials. Commercials run the market. They account for over 90% of all futures trading. And when they're buying, it's a clear indication to expect higher prices. So I would look at those, although a lot of people are bored by those markets. They do have some very strong predictability. What else between now and the end of the year? Ordinarily, you'd expect gold to go higher in September, which it has done. I would encourage people to look at copper, because copper, in terms of the big picture cycles, is extremely bullish. It'll probably be very explosive, no puns intended, because you need copper for ammunition.
Let's see. Now, the way you always explained why you look at the, like with COT, we can talk a little bit more about that. There's several categories. There's commercial, there's private investors, and I'm trying to remember what they all are. But you kind of like to focus in on just the commercials and what the commercials are doing.
Right. So
And
there's basically three categories: the small trader, the large trader, these are speculators, and then, of course, the commercial. They're the ones that use the market for the purpose that it was created for. And they don't change their positions very rapidly. You won't find commercials buying for a small move. You'll find them buying for a big move. And there's numerous examples of this in the history of the market. So they're very rarely wrong. They buy on a scale down, the dollar cost average, and then when the market starts to move up, they unload their positions all the way up. So you have to understand the COT in order to use it correctly.
okay. One of the things that have always kind of turned me off with the futures markets is the leverage that's involved with them, and the fact that you can lose so much money so fast. How do you kind of offset that risk when you're trading futures?
That is a beautiful question, Jeff.
Well, thank you. I'll write it down. You use it again.
Let me get back on track here.
Okay.
That's all right. So one of the things that I'd like to do is this. If you look at your margin sheet and you see that it's like $1,000 to buy a gold contract, the real cost of that is much bigger because, as you know, 90% of that is leverage. So for $1,000, you're controlling about $80,000 worth of gold. So what I like to do is I say to people, trade the mini contract or the micro contract, which is much smaller, or allow more margin. So if your broker says it's $1,000 to buy the gold contract, allocate $5,000 for it. So that way you won't be unpleasantly surprised when the market moves against you, because as you so rightfully said, you can lose much more than what you put into it.
Cool. Kind of switching gears a little bit. We talk a lot about technical analysis and kind of how indicators and how to use them and that kind of stuff. How much of the trading would you say is a psychology game?
You know, Jeff, that is such a beautiful question. You keep on hitting these questions out of the ballpark. You know, here it is. When I wrote my first book called The Investor's Quotient by John Wiley, I used to believe that trading was all about psychology. I don't believe that anymore. There is no psychology of trading. There's psychology of confidence. If you're a confident trader, you will have discipline. If you have discipline, you'll make money. If you make money, you'll be more confident. If you're more confident, you'll make more money because you'll be more disciplined. So it has to start somewhere in the circle. What happens to you in terms of psychology is not important in terms of trading, in my opinion. What's important is the discipline. So where does the discipline come from? Does it fall out of a book? Can you get it from a shrink? No, it comes from knowing the rules. So it's all a very vicious circle or virtuous circle. If you know the rules, you follow the rules. The rules will give you confidence. The confidence will give you discipline. The discipline will give you profits. The profits will give you more confidence. More confidence will give you more discipline. And that's the way it goes round and round and round.
Sounds like a circle.
It is. It's a virtuous circle.
Do you feel like your background in psychology helped you or hindered you when you started trading?
I'm going to say initially I thought it helped me, but then it hindered me because I ignored the rules aspect and I kept on thinking, I need to have confidence. How can you have confidence in something that doesn't work? So if you go and you do the back test on Metastock, you say, now here's the track record. It looks really good. That gives me the confidence. That's where my confidence is going to come from. It's going to come from results. So if you don't have the confidence, you won't have the discipline, and then you'll fall into the trap of psychology and say, I'm a good person. I deserve to win. I have a positive attitude. Well, how can you have a positive attitude with something that loses money? Example, a lot of traders believe in what's called the golden cross and the death cross. The 50-day moving average crossing the 200-day moving average is supposed to be the golden cross. It means to buy. The 50 crossing below the 200 is the death cross. You're supposed to sell. If you go to the track record, you go to Metastock, you program it, and you ask the question, has it made money? Yes, in the long run, it's made money. But that's the key, because in the process of making money, it's been wrong 18 times in a row, and nobody's going to be there after the third or fourth time. So it's a good system in the long run. If you've got a ton of money like Warren Buffett, you can trade a system like that. If you're a hedge fund, you can trade a system like that. But as a human being, an individual retail trader, you can't do that. You run out of money.
One of the things that stands out to me is something that you said, and I think it was one of the conferences that it just kind of stuck with me, and it had to do with like people that are losing in a bull market. And I'm trying to remember exactly what you said, but like, let's see, when you were talking about it, you're like, well, the market's up X% this year, and if you're losing money, there's something wrong, and you need to fix it.
Yeah.
And that was the gist of it. If somebody's in that type of a scenario, what would be your recommendations to kind of turn that ship around?
That is a super question. So here's the idea. If the market's moving up, you should be making money. If the market's moving down, you should be making money. If the market's chopping back and forth, you probably won't make money unless you're a very short-term trader. The way to get out of that problem is to figure out why. What's wrong with your system? If your system is not right, then you got to get a new system. And goodness knows, with the computer power you have at Metastock, it's very easy to find a good system. All you have to do is be willing to spend a little time with it and look at the different alternatives that it provides you with. If you buy a system from somebody else, you have to be very careful, because if you don't know the rules of the system, they say this is a black box system. Just do what it says to do. Don't do that. So it's all about system development. And you know what, Jeff? Systems don't have to be complicated. They can be very, very simple. In fact,
for me, I find that the more complicated they are, the less I understand them and the less I trust them. So.
Yes, that's right. Sometimes I'll get a chart from people. There'll be all kinds of colors and lines and angles and notes and trend lines and support and resistance and 16 moving averages. And I look at it and I say, excuse me, what the hell is this? How can I make any heads and tails out of this? It's just too confusing, which is one reason why I don't use candlesticks. I like the candlesticks. They're very pretty, but for me, it's too much information. I have made my best trades, and I mean this sincerely. My absolute best trades have been the most simple trades, or the ones that I forgot about.
Yeah, somebody was talking about a study where Schwab did a study, and that they found that their top performing traders were the people that had died. Just because they didn't know. I think that was John Thomas that was talking about that in our conference last week, and it just made me laugh.
You know, I had a situation a number of years ago where I bought some gold contracts, and I thought that I had sold out of those gold contracts a few months later. Then I got a call from my broker, and he said, hey, listen, that December gold contract is up for delivery. What are you going to do with it? I said, what December gold contract? He said, the one that you bought 7 months ago. Oh, I said, oh, yeah. I went and looked at my records, and I realized I had bought the gold. I thought I had sold it out and taken a profit, but I still had it. That turned out to be the best trade that I made. And my broker, Joe, says to me, how did you do that? I've never seen anyone hold on to a trade that long unless it was a loser. I said, yeah, you know how they say, just buy it and forget about it. That's exactly what I did.
I'm glad you didn't take delivery on it. Or did you?
No. I did take delivery on a bunch of cattle at one point, and that's a whole other story. You never want to take delivery on cattle. Never do that.
Okay, I'll take your advice, Jake. I'll actually even put that in the show notes. Let's see. We talked a little bit about seasonals. We talked a little bit about technicals. I think I know the answer to this. Do you use any news in your trading?
I use the news only as it suits my position. Example, if I'm long the market and a very bullish report comes out and the market spikes higher, I will take some of my positions off to take advantage of that news, or vice versa. But I never trade on anticipation of the news. Usually, if the indicators are good, which I think mine are very good, the indicators will tell you what the news is going to be, bullish or bearish, before the news happens, because as we know, there's inside information, and traders trade on inside information. And if they trade on sufficient large positions, it will be reflected in your technical indicators before the news becomes the news.
Is there anything else that you factor into your trading decisions aside from technicals, seasonals?
Yes.
Okay. What is it?
Small trader sentiment.
Okay. Oh yeah, Jake does a DSI, the Daily Sentiment Index. Talk a little bit about that.
Yes, what we do is we determine every day, and have done this every day since 1987, what is the sentiment of the small trader, the trader who is most likely to lose their money. And once we know that, for example, 80% of the small traders are negative, we are close to a bottom. If 80% of the small traders are bullish, we're close to a top. And what's really interesting about this service is the vast majority of subscribers to this service are not small traders. They're commercials. They're hedge fund managers. The biggest traders in the world want to know what the small traders in the world are doing because they want to do the opposite.
Cool. What do you, this has been a great session. What do you do to recreate? What do you do to kind of, when you're not trading? What do you do for hobbies, Jake?
I love organic gardening. I've got a beautiful organic garden. I grow my own.
Yeah, yes, I've been there.
Oh, thank you. I grow garlic, I grow onions, I grow tomatoes. It's very good for my spare time. I love to drive fast cars. I own a few fast cars, but I don't do it to kill myself. I'm very careful. I'm a very, very careful driver. I love to collect antiques, and I love to do charitable work. Those are the things that I really enjoy.
That's awesome. And do you have any, before we close up, anything else you'd like to say?
Yes.
Okay.
Keep it simple. Keep it clear. Learn the rules for what you're going to do before you do it. And if you're going to gamble, which in effect we really are doing, we're betting on something happening. If you're going to gamble, do it the right way. Get the facts. Don't trade without the numbers. So if someone says to you, hey, I think gold's going to go up, maybe you should buy some, don't ask the question whether you're going to do it or not. Find out why, and find out what the indicators are saying to you. That's my best advice.
Cool. Finally, if people want to find out about DSI, or they want to find out more about your newsletter, their services, where's the best place that they can
go? Just jakebernstein.com.
And we'll put that in the notes too. Okay, very good. If you are watching us live, thank you for coming. If you're watching us in the future on YouTube, I hope you're doing well. Also, I hope you're doing well if you're watching us live. But if you're watching us on YouTube, like and subscribe. Go ahead, sorry.
Let me say one more thing.
Okay.
Traders need good information. They need a service like Metastock that is crystal clear with many choices. But don't let the choices of indicators overwhelm you. Do a little homework. Find out what indicators are suitable for you. It's one thing to say, hey, this is a great strategy, but sometimes it won't be great for you because you don't have the time or the skill to use it. If you have something like Metastock, it will guide you in the right direction. There's training. There's specific things you can do. You can start small. Don't expect that you're going to be successful right away because it's not going to happen.
Thank you, Jake.
Thank you, Jeff.
JakeBernstein.com. If you watch this on YouTube, like and subscribe. Join the community, thetradersforum.com. It's something that we're doing that's a lot of fun. If you're interested more in Metastock, reach out to us. We'd love to hear from you. So thank you again, Jake. Thanks everybody for watching. I'll see you again soon. Thank you, Jake.
My pure pleasure, Jeff. Thank you.
You bet.
Take care.